What's going on, apes? My name is Tyler and welcome back to the channel for another very important AMC update video. And in this video we're going to be going over a new finalized rule change from the SEC that is going to incentivize institutional investors and hedge funds coming Monday to actually route their order flows to lit exchanges instead of dark pools. Now, if you guys have been in AMC for quite a while, you know the speculative theory out there. I'm going to say speculative because nobody wants to get sued here, but the going theory is that Citadel and other market makers are taking all these order flows they get via payment for order flow. They are selling stock short on the open markets, buying it back for much cheaper on the dark pools. So that is the running theory here. We're going to talk about that, exactly what dark pools are, as well as go over this whole entire SEC filing and everything you guys need to know related to this. So let's get into the video. Hit that like button and make sure to subscribe to the channel for more videos like this, as well as comment down below. Let me know what your take is on this. So first things first, let's talk about the dark pools, and we're going to go straight to Investopedia and just look at the key takeaways. So dark pools are private exchanges for trading securities that are not accessible by the investing public. Dark pools were created in order to facilitate block trading by institutional investors who did not wish to impact the markets with their large orders and obtain adverse prices for their trades. According to the most recent SEC data, there are 59 registered alternative trading systems, aka dark pools, with the SEC as of May 2021. So essentially what they are doing is doing all these massive orders, because we do know a lot of these market makers, like Citadel is the biggest market maker, and they route about 70 to 80% of all retail trades. They can actually hold these on their books and basically let these out whenever they want to. So when the stock price does start to fall, if they want to let those orders out there, they can do that. Now, that is the running theory here, like I already talked about in the beginning of the video, but this is very important to understand completely what is going on, because like it says here, they are intended to not influence the price of the stock. So if they're flooding the market with all of these short sells in the open market, covering them on the dark pools for a cheaper price, they are ultimately driving down the share price, and I think that is what is going on. I ultimately think that is why we have had such strong resistance at that $60 price point. I think it ultimately does come down to Citadel, but keep in mind, everything I say in these videos is somewhat speculative mixed in with real facts, so take these with a grain of salt. Don't base any expectations off of these. These are only my opinions, and do your own due diligence and come to your own conclusions. But as far as the actual short percentage and the dark pool percentage, this is way higher in AMC and even other stocks than it is on normal stocks. So as far as Friday, July 16th, we've seen the short percentage of 57.1%, dark pool percentage of 66.6%. This is effectively the number one reason or way they are keeping AMC stock down when all apes are buying the dip. And to be quite honest here, throughout these last couple of major sell-offs we have had, especially that day we dropped about 17%, we actually had $1 million more in inflows to the stock. So $1 million additional dollars that were going into the stock, being bought into the stock, than were actually being sold of stock. So I think that's very important to understand this and what this potential rule change will have when it does come to dark pool trading activities. Now, let's get into this proposed rule change, and there is a lot of pages here. We're going to save you guys the bullshit, get straight to what you guys need to know. So it says the way of background, a QCC order is comprised of an initiating order to buy sell at least 1,000 contracts, coupled with a contra side order to sell by an equal number of contracts, and for complex QCC transactions, the 1,000 contracts minimum is applied per leg. Currently, the exchange accesses no fee for customers C capacity and professional U capacity, and collectively referred to as a customer transactions, which are identified by fee code QCC transactions and 0.17 per contract side for non-customer transactions, and non-professional transactions, collectively referred to as a non-customer transactions, which are identified as fee code QN. In addition, the exchange provides a $10 per contract credit for initiating the order side regardless of origin code. Now, this is where it gets important. Now the exchange proposes to increase the per contract credit for the initiating QCC order from 10 cents to 11 cents per contract. The proposed change is intended to incentivize TPH TPHS to direct QCC order flow to the exchange. That is very important. That sentence right there. I will say that yet again because you guys have to understand what is being said here. The proposed change is intended to incentivize TPHS to direct QCC order flow to the exchange. So they want to take this dark pool activity away from the dark pools and send these to the lit exchanges. And the only way that they can basically do this is to pay them more for their order flow. So I do think this is overall a huge positive thing for AMC stock, and we should actually see the actual dark pool activity or percentage of dark pool orders start to go down coming as soon as Monday. This does say the proposed credit and fee change are in line with, yet also competitive with, rates assessed by other options exchanges. And that is really where you get a lot of these discrepancies, manipulation, fraud, and even price differences from the dark pools and the lit exchanges, because there is so much volume going to these dark pools. If you consider AMC has in between 60 million and 120 million usually, or even 200 million on the high end, and about 66% of that is going to the dark pools. So you're looking at in between about 70 million to about 150 million in total volume that is going straight to dark pools, which that price could be much higher or much lower. We don't have that information, but there is a arbitrage here, like I said, where these hedge funds, institutions can flood the market with open supply. There's also tactics and strategies they can use to not let those public short sales actually be reflected in companies like Ortel or S3 Partners data. But it is also very important to understand what a block trade is, and that is essentially a large amount of shares, and that is essentially what payment for order flows is selling, let's say, $300 million worth of order flows in a single day, or whatever the number is. I just totally made that up, but whatever the number is, they don't have to necessarily fill those orders right away. So if the stock is going up, they don't have to put your orders in at that price or whatever you're actually buying that for. There is a discrepancy here, and even in SEC filings, it says if the stock can be filled at that price. So it is really up to market makers like Citadel to actually fulfill these orders at whatever price they do want. So the running theory is that they are holding these orders when AMC stock is going up, and then once we do come down, well, obviously flooding the market with short sells and naked short sells when it is going up, but then put your buys orders in once the stock actually does start to fall. So you don't get that continuation, you don't get that momentum effect. But that is pretty much all for this video. Hopefully you guys understand what is going on here and how great this could be for the overall movement. Hopefully we do see this dark pool percentage actually start to go down. That would be a great thing and indicate that this rule change is actually starting to be in effect. So with that being said, make sure to hit that like button, consider subscribing to the channel for more videos like this, and if you want to join a brokerage that does not do payment for order flows and your orders, your stock trades go straight to the lit exchanges, check out the link for public in the description. No deposit necessary, no need to link a bank account, and it only takes about 3 minutes time to get your free stock. So it is literally free money and the best thing that you guys can do right now for your financial future going into the future. Also, make sure to check out the link down below for the buy and sell alerts if you guys want to be notified every time I buy the dip in AMC, whether it's a day trade, swing trade, longer term investment with any stock, even crypto. Check that out for the buy and sell alerts. It is very inexpensive. You join a great community and it pays for itself. But with that being said, I will see you guys in the next video.